Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Okay, everybody, welcome to another edition of Digital Currents and the ABCD News Roundup. I'm solo today. X is out doing the hard work, trying to raise assets over in the UAE. He'll be back next week. And I'm going to do it solo again. So we'll see how this goes. Quick reveal. So I am wearing the green pants for green candles. And I did go back to the Genesis block sock game today. Every time I start really thinking about Bitcoin, I just go back to what's the purpose of Bitcoin and why does it exist, and back to the Genesis block and the bailout, the chance we're on the brink of the second bailout for banks. And as we think about kind of what's going on globally with money supply and banks and central banks around the world cutting rates, that's good for assets like Bitcoin that are devalued, or as the currencies devalue around the world, Bitcoin prices go up. So, we're touching back at 105. It's amazing when you really think about this, in that you've got a nice green candle today and yesterday after the crash, right? We got over 107,000 back in December, kind of as we thought would play out last year, that we'd hit six digits, somewhere in that range. And then it crashed all the way down to 91. And it's really interesting. I went back for my Around the World 10 Surprises a couple weeks ago, and I looked at historically stories about Bitcoin crashes. So there was a crash when it got up to like 200 something, and it broke all the way down below 100, and it was 236 and went below 100. I said, I see it's crashing. And so then it went back up, and then when it broke through 1,000 and stumbled around it, and then went back below 1,000, I see it's crashing again. And a couple of years later, it hit 10,000 and got all the way to 20,000, and then back down through 10. And there was more stories about the crash. So $100, $1,000, $10,000. And now here we are at $100,000 and we're crashing. Well, now we're back above 100K. And I don't know if it'll go back down below or not. In the short term, I'm really bad on short-term stuff. Long-term, the asset's just going to keep going up. Lots of stuff going on in Bitcoin land. Trump has taken office. He's got his czar, David Sachs. He's got a crypto advisory force. Now, there is some discussion about digital assets, crypto, and Bitcoin, in the sense that, he promised that at Bitcoin 2024, on the advice of Senator Lummis and others, David Bailey from Bitcoin Magazine and others, that he would mandate a strategic Bitcoin reserve. And so the executive order that came out a day after, or 2 days after he took office, was for a digital asset stockpile, not a strategic Bitcoin reserve. Different language, intentionally different language. I guess, from what I understand, executive order doesn't allow for the establishment of an official reserve, something that the Treasury would buy. That's to be an act of Congress. So he did, the next best thing. He did what he could do, which is say, okay, the stuff we already have, the stuff we have seized, the Biden administration was, trying to get out and sell in advance. Again, don't know why, other than to do the opposite of what Trump said he was going to do. It didn't make sense to sell it. But there's multiple assets in that stockpile. So it's what was seized. It is kind of a stockpile. So that said, we're not going to sell that. Okay, great. Well, then there was this decision or this discussion, most of it online, and most of it being pushed by the XRP crowd, the people at the top, Brad Garlinghouse and others, saying, no, Mr. President, you need to include other assets beyond Bitcoin, and we think XRP should really be it. And it was interesting. I mean, Brad did get to a dinner at Mar-a-Lago and took, photos and pent mountain. So everybody's like, oh, this is going to be great. And is this going to work? But then a couple of things happened. One, President Trump said, well, Brad, you actually supported my opponent with millions of dollars. I don't know what the exact number is, but arguably with millions of dollars, maybe with million, I don't know. But supported Ms. Harris, and you didn't support me, so maybe I shouldn't support you. So that was an interesting exchange. But then there was more push, and then the Trump coin came out, and there was a lot, and basically a meme coin, and there was a lot of discussion about, well, XRP is just a meme coin, so maybe Brad told President Trump how to do that, and you take 80% and you keep it yourself, and then you pawn off 20% to the masses. I mean, with XRP it was 100%, and they've sold off, I guess, 45%, so they still own 55. The most interesting thing that separates, to me, what should be in a reserve asset or not is people should be buying the asset, not selling it. So the XRP founders never buy, they only sell. So let that sink in for a second. So the people who founded it, they don't really believe in it per se because they are selling it. Now they're going to keep some because by selling to the masses, that has pumped the price from fractions of a penny up to $3. So on paper, they're billionaires. Now, the thing is that market cap number is just a silly number, right? Because if they actually tried to sell any amount of that, the price would go. That's what happened with Trump, right? So Trump coin went way up and, he made $50 billion. Well, no, because they went right back down. Because as soon as he tried to sell, and he did sell $500 million, so locked in $500 million. That's a lot of money, but it's not $50 billion. So, and if anyone were to try to sell from those original wallets, I think the price would collapse. Or you've seen meme coin after meme coin after meme coin just collapsing lately for these same reasons. Because at the end of the day, they're a zero-sum game, right? That's different than Bitcoin. Bitcoin wasn't created by people. Well, that's not true. It was created by Satoshi Nakamoto, whoever he is, and maybe with multiple he's, but let's say it was one he. And there are a million tokens in the original Satoshi wallet that were early mined. Remember, those were mined, right? You had to contribute something. You had to do work to get rewarded. It's not like you just made them out of thin air and gave them to yourself. That's different. And so the proof of work, X, you're back.
Hey, Mark, how's it
I
going?
didn't know you were back. All right.
I'm in.
Right. Well,
Yep.
we may edit out the beginning. We may not edit. So I was just ranting about Bitcoin and XRP. So I did not know you were back. Welcome back. And
Thank you.
glad we get to do this together. I had no idea.
Always good, Mark. I would not let the community nor you down to the extent that I can be beamed back here, either physically or virtually. I'm always happy with the advent of technology. And there's just so much to talk about, Mark. I mean, we're going to be doing probably a webinar on the DeepSync stuff directly. But obviously, these are things we've been telegraphing for a long time as we kind of think about how the private influences the public. But then, of course, the public goes right back and influences private. So it's just an amazing time.
It is. And so really all I did in ad-libbing here, it is so weird to do it by yourself. I mean, just talking to this little green light, much better to do it together. So I'm glad you're back. And basically just talked about Bitcoin. I said, I'm wearing the green pants today. I'm wearing the Genesis block socks because every time I start thinking about Bitcoin, I go back to the origin story and why was it created and what was it created to do and what is it? And so there's been all this talk in, the communities, all the different communities in crypto that, hey, the president's more of a crypto president. He's not a Bitcoin only president. And maybe they're going to make XRP or maybe they're going to make Cardano or maybe they're going to make other things included. Well, nothing's been done yet. And yeah, they use the word crypto a lot. So that would lead you to believe that it's things beyond just Bitcoin. But I was basically describing the differences between a token that's created by founders that they keep for themselves and then they sell off to the masses versus an idea like Bitcoin where Satoshi did mine early, but so did Hal Finney and others. And those who contributed effort and resources to secure the network were rewarded. So they didn't make any for themselves. They just started it ticking, and they happened to be the only ones that knew about it at the time. But then as more people knew, more people added on. And now, there was an amazing one this week. There was a home miner, a single miner.
Oh, that's right.
He got a whole block, right? He got the whole block reward, which, is 3.25 Bitcoin. So $350,000. I mean, that's a lot for one person. That's great for 10 minutes of work, 10 minutes of work. But the difference is I still believe that the Strategic Bitcoin Reserve will get approved. And we saw, my people, the Czech Republic, we think, we're not 100% sure that Jusko was probably Juskovic from somewhere in that, it's funny, my wife's reading a book about the Serb-Croat War.
Okay.
And there's some history in it and there are these maps. Holy moly. I mean, there are a lot of borders moving and a lot of country names and Montenegro and Macedonia and all. So somewhere over there in that morass, my people came.
Oh, great.
And they showed up on Ellis Island and they're like, what are you saying? Juskovic? Jusko. Y-U-S-K-O. So that's what we are.
And that's not Yusko. It's Jusko.
Go. And well, that
Very good nose.
is very useful. It's some people call you Javier versus Xavier.
Yes.
Right? It's very useful to have a name that can be pronounced two ways because you're like, you don't know me. I can spend time with people who know me. So it's good.
Right. There you go. And I think, jumping on in, Mark, and I think this is probably one that for those that don't know, we make tons of trips around the world, which is probably one of the awesome things that we get to do because we get to see how business operates globally. And so we just came back from Dubai, and the second that I land there, Mark, that's when there was the equivalent of the Spanish GDP drop in the NVIDIA market cap price, which is insane. So to repeat that a little bit more cleanly, basically, as a result of DeepSeek coming in, DeepSeek, there was a lot of kind of loss of confidence and questioning about, is AI basically overblown, or are these models like too expensive? Am I going to just crater all these public equities? And so, basically NVIDIA goes down the equivalent of Spain's entire GDP in a day. And I land, I'm not sure what time it is. And so I'm getting all up to speed, but I'm so excited now that we were here a couple days afterwards where things are sort of getting a little bit more sorted and we're understanding really what this means. And I think this is so funny, Mark, because, we always see technology ahead of litigation and then litigation comes back. So of course, OpenAI now is calling a foul, saying, no, you guys copied off of us. And then Google's saying, wait, but then they copied off of us to create the model in the first place. So I think this is really just what strikes me about this, Mark, is that you have a model that's gotten created off of inferior chips, right? The 800 chips, which are not the ones that OpenAI is really processing on. Those are the 100 chips, the fastest, the biggest, most powerful ones. And it's really showing the relationship that we talk about. This is about ABCDs clearly, in my opinion, because we talk about the intersection of these.
Such a really, really critical insight and such excitement. So we had people calling, right?
Mm-hmm.
You know, you were off with Sachin on the other side of the world, but here people were freaking out. They're like, you know, NVIDIA just dropped $500 billion, $500 billion. Like you said, I mean, the GDP of Spain, and more than only 15 companies in the whole world.
And it's somehow still alive today, Mark. I think that's also the crazy thing there. They're still alive.
And but here's the crazy thing. So what happened is this model DeepSeek gets released.
Yeah.
It's just an LLM like other LLMs, but they said, hey, it only cost us like $6 million to train this thing. And people's heads exploded. Like, wait a second. And we only needed 10,000 of these chips. And they're the inferior chips. And so everyone's freaking out. And people are calling us and saying, well, what does that mean for all these chip companies you've invested in? I'm like, it's the greatest thing ever. Because what happened here was not an innovation in chips that said NVIDIA chips are no longer necessary.
Right.
It was basically some young kids, and these are, I'm sure you've seen the pictures, right? They're kids. And one other interesting factoid about it. So I don't know if you've seen the meme. It's I think it's like a robotics championship. No, it's the AI championship, actually. And you got Team USA with their flag and Team China with the flag. All but one of Team USA are Chinese, and of the Chinese are Chinese. But the interesting thing is the picture of the DeepSeek team. So this is a hedge fund guy,
Right.
as a side project. I love this. He runs a multi-billion-dollar hedge fund. And as a side project, he's like, I want to mess around with this LLM thing. And he hired a bunch of bright young people. But the kids that he hired are not returnees. They're not the Chinese that came to Harvard and Yale and Princeton and Stanford and then went home. They're all from Peking and all the Chinese universities.
Yeah.
And I think that's very interesting because, again, we say they copy us. And the reality is they graduate 10 times more STEM engineers than we do.
Mm-hmm.
Turns out some of them are really good. So what they did is they said, well, we don't need to access the data every time. We can maybe leave it over here in low bandwidth memory and not have it be in the high performance memory where there's this big bottleneck. And so you need more and more chips. And they actually, to your point, used software
Yeah.
to optimize the hardware. And like, well, so I can, and that's the way it's always been. I mean, I'm old, right? So I remember my first computer when I wanted to upgrade the computer. Right? I had to unscrew the back and take off the case and take out that board and take the thing carefully out of the plastic so I had to ground myself so I didn't, shock it and hurt it. And then I put it in there and invariably I'd plug the wire in the wrong way. And so it was hard to upgrade your hardware.
Yeah.
And there was no software to make it go faster. Well, then people started coding software. Say, well, I can make that computer run faster because I can separate some of its functionality. And maybe I can have it do things serially or parallel. And so the software engineers, and they actually came up with, because this is the other thing, I love this. So we have open, capital A, capital I in America. And what DeepSeek did is they created open, little o, capital AI. Open source. So they put their paper and all of their research on the internet so everyone could look at it. And people said, this is actually a novel way of thinking about the problem of doing these calculations. And so, to your point, we don't need to spend this much anymore. We can spend this much on the LLMs. And everybody's like, oh, well, that's terrible. No, that's awesome. Because right now, you and I are talking using TCP/IP, which 50 years ago was this mind-blowingly complex thing that there's no way we'd have enough money or time or resources. Well, now it's an afterthought. So now it's the Zoom application that sits on top of that and the other things that are connected to it And so now all the things are going to get built, the agents and the agentic models that support the agents themselves and all of the other applications. And we talk about this internally a lot, right? We have this great job. We get to talk to people who don't just think outside the box. They think like there is no box.
Right.
Right? Because they have to imagine things that either don't exist or pathways or structures that don't exist.
Mm-hmm.
And that's so awesome.
Yeah.
And it's so positive because it accelerates the path of innovation. So yes, if we had invested in late stage companies in the private markets at 50, 100, $150 billion valuations that make LLMs, those are going down.
It could be a little sticky.
I think
it's one of those things, Mark, where, a couple of themes that stick out to me. Obviously, I think Meta is the big winner here, again, because they're kind of showing the open source model. And so I'm reminded of two different business ideas going back to the old business school case days, right? So you have the open source model, which is Google. You have the closed source model, which is Apple. And they kind of have a different way of both being successful, right? So Apple has always fashioned itself to be this more premium edge product, a closed network that if you abide by their rules, you'll be kind of handsomely rewarded as an app developer. Google's the opposite. They said, give us your crappy phone, just get us on as many units as possible. And, that's 80% of the market right there. So I think what's kind of also interesting with this story and where I'm a little bit scared for NVIDIA is the fact that they have their chipset. And I think, that's not going away anytime soon. Their chip making company, they'll continue to do that. And I think kind of some of the analysts are a little bit more narrowly focused on what's making money for NVIDIA today. And we all know this is going to be a game of acquisition to figure out their next lines of products, which is going to benefit the VC ecosystem, in my opinion. But the rub here, I think, is the back-end technology that works with NVIDIA called CUDA. And so that's kind of this framework that allows the developers to really perfect some of these chips. And with the DeepSeek guys, they didn't use that. They used kind of this other system, which was kind of like more like a finely grained optimization layer. So even more, I guess, scrappy. And I think this kind of shows sometimes that like, this almost reminds me of some automotive industry, right? Where you have kind of like the regulatory apparatus that says your car can only have this much horsepower or this much fuel economy. And then you give it over to some people who are wizards at computer programming, and then they can unlock performance. And, I'm a big car buff. So this reminds me even of the earlier days where Mercedes actually bought the rival tuning shop, which is AMG, which is now when you go to the dealer, those are the fancier models. And I suspect that will continue to happen because a chip maker's job is to sell more chips. So if there's software that's superior, two things will happen. Either they'll kill it, which they cannot do in this case. They'll have to acquire it or adopt this framework, which is also why Apple runs on Windows. Big surprise, right? That was never really the goal back in the day.
It's so amazing. So many things here that are amazing about what you're describing. So the Apple thing. So Apple stock went up. So everything else is going down, like by a lot. And Apple goes up. Well, part of that was because the reason DeepSeek blew up in a positive way, I mean, got it, is because it got put on the App Store.
Yep.
So people could download. So I have it on my phone. Everybody's, oh my God, you're giving your data to China. My data's everywhere. I don't care about, people know where I am. I don't really care. But the reality is, and what I asked the LLM, that's not really that interesting. I mean, I asked it the other day, tell me about Alexander the Great. If they want to know that I care about Alexander the Great, I don't really care about that. So, but what was interesting about that is DeepSeek was created, version 1, a year and a half ago, then version 2, then version 3. And even in October, when version 3 came out, people were like, well, why didn't it make a big splash then? Like, because it wasn't on the App Store. And you had to go and it was in China, and China's off limits. And what's really interesting is over the weekend, multiple companies one-upped DeepSeek.
Yeah.
DeepSeek one-upped OpenAI, and Claude and all this other stuff. And then another, I can't remember which one it was, but then Alibaba on Monday came out with Quen, and Quen blows both away in terms of speed. And now Alibaba's got more resources and they probably have lots of NVIDIA chips. But the point is that they created, and Alibaba stock has gone absolutely vertical. And we talked about this actually in we do the 10 surprises on the other side of the house every year. And one of the surprises was, if you look at US tech stocks and their valuations, they're amazing companies, but their valuations are really, really high. You look at Chinese tech stocks, really great companies, but valuations are really, really, really low. And I didn't say it was going to happen tomorrow, but there was some likelihood that was going to shift. And so Alibaba stock is on a roll. And what it just shows is that all of this innovation is going to happen where there's bright people, and there's bright people all around the world doing really interesting things. And it's going to promote a really interesting dynamic. And I thought I shouldn't pick on him, but I will. So I thought the CEO of Anthropic was really kind of funny. He's like, we need to stop this. We need to protect our lead in, AI, US. Like, so free and fair and open competitive is good until someone else is winning. Then we got to use force majeure to stop that.
I mean, Mark, this is the next step of our yearly series, Chip Wars, and it's come back. It's been dominant. I think for a while the U.S. had a big lead, but then not to be overshadowed, China came rearing back in such a dramatic and pronounced way. And I think the idea here is that since they were able to do this on these inferior, they're still amazing chips that NVIDIA created, they've already stockpiled a whole bunch of the newer chips. So this idea that if you can kind of curb this, it's gonna weaken them. And it's really missing, the whole point of this, which is that what we always say is that innovation is undefeated. The reason that they had to make the model more efficient by the way that they kind of cap the energy consumption is brilliant, because if I am OpenAI, I have more funding than any other company. So I could just buy and acquire, and then I can basically use the old adage of, I have economies of scale, right? So therefore my computing power will be better. But that doesn't necessarily mean that your algorithms will be better. And I think that's a critical,
really important. And you said something earlier that is, I used to call, when I was doing this, we'd always slip into Sinister Saturday. Right? We release this on Saturday mornings. And I always said there was something that we talk about that would be sinister. Well, the sinister part here is this idea that, Microsoft on early on was kind of push OpenAI to sue DeepSeek, right?
Yeah.
For violating their intellectual property. And I'm like, whoa, time out. So what you're saying is, if I use your product and I create the prompts and and all yours is a tool. So I create it. And that's basically what this thing did, is they did say, look, you've taken all this information and you've synthesized it. And so we're just going to keep hitting your system and get answers. And then we'll train on the answers, because we don't need all the superfluous stuff. We just need the good information, which is actually genius, absolute genius. Because think about it. I got a lot of books behind me in the library that Stacy's read. I don't read them. But it's not all the books in the world. There's lots of books, but they get distilled down, and then you only have time to read so many. So absolute genius to train on another model. And that's our intellectual property. Well, whoa, to your point earlier, well, but didn't you train all this other information? And aren't you actually being sued by like image companies where you
multiple
violated, trademarks? And so I actually asked this question to someone the other day. I said, there's a music guy that we're talking to. He's got a really cool company. He likes all the stuff that John Bon Jovi has ever had.
Oh, the sure one.
He's turning it into digital.
Mhm.
And so that was cool enough, right? You could buy John's guitar. You could buy a video of him when he was in high school. That's all cool. But what was really interesting is that's a captive data set that now you could train an AI. But John can't sing anymore. So could you create new art using John to train? That's kind of an interesting idea. But the point was, I asked him, I said, I asked when ChatGPT first came out, I said, write me a song in the voice of Taylor Swift, right? Okay. And it spit something out. And it was awful. And I'm not saying Taylor Swift music is awful. What I'm saying is what it spit was awful. Now, let's say it wasn't awful. And what if I had taken that and taken it to Nashville and had somebody record it and it became a big hit? Could then OpenAI say, no, we own that. No. I did the prompt. I had the idea. But it's a very slippery slope. Who owns that, right? If I write out a song with a pen, does Bic own it? I mean, it's kind of interesting.
Yeah, and I think also on this, you're gonna start seeing other companies test the limit now that this is all open source and out in the ether. And I thought it was actually a pretty calming statement by our President Trump, saying that this is really a call to action for American tech firms, which obviously he's had somewhat of a mercurial relationship with over the years. And so on one hand, you had an outgoing administration that was trying to curtail exports of most advanced chips to competing and rival nations, and then also kind of giving some more favorable treatment to kind of our domestic firms. But then also there was favorable treatment towards international firms when you had like the Samsung plants in Arizona and Texas. So
Right.
we'll mention it's more complicated. But now within this kind of an administration, there is this idea that there are going to be some companies that are going to be given the Midas touch and allowed to proliferate. And there'll be others that will be up against a little bit of a headwind. So with this notion that it's really now showing DeepSeek that you can do more with less, that should play into the hands of startups very, very nicely. And in this era where we're expecting some pretty exciting IPOs to happen this year, I've been calling this for 18 months that M&A activity is going to be even hotter than the IPO market. And we're going to start seeing those companies that are, around 100-ish million that have shown this propensity to have, good technology, but maybe not great sales. And those are going to potentially be the candidates for these bigger tech companies that really can't innovate at the same speed because they will be hammered because they're thought of as doing one thing. And I think that's really going to be the shortfall in the next kind of quarter or two as we see the deep sink after effects, right?
Yeah. It's there's so much happening, and this is why I love you get the intersection of A and the B and the C and the D, because at the end of the day, this is all about the data. It's like I was saying, that data, that John Bon Jovi collection, that's unique data. One of the reasons that China was able to outcompete these other U.S. firms partly is the Chinese data is better. Why is it better? Well, it's bigger, right? There's more of it.
Yep.
And they had a little more liberal, shall we say, capture, right? They didn't have the EU punch the box to a cent. If you're using the systems, your data is being collected, and they were a little bit further ahead. And I did think there was one interesting thing. I can't remember who said it, but someone tried to make the statement that the reason the DeepSeek was so much better is because they have bad labor laws and they exploit people. Like, totally wrong, right? No, it's the exact opposite. It wasn't exploitation. It was just smart. These people did something that was smarter, and that's not saying what. To your point, it's like the H100 versus the H800. It's not that the 800 is bad. It's just the 100 is better. And so we're not saying that the American tech is bad. It's just that these kids did something It was really, really brilliant. And not different than what Larry and Sergey did. I mean, to this day, Google was the number 21 search engine. There were lots of search engines. But they said, well, why would you search the whole internet for information? That's silly. That's hard. That's going to use a lot of chips and a lot of computers and a lot of electricity. I know every time you ask the question, which Pokemon card do I need to beat this Pokemon card? I know where to get the answer. I don't need to search the internet for that.
Right.
Or, where do I get hair dye to turn my hair blonde? I don't need to search the internet for that. I go here. So indexing was an innovation that these two kids, and remember, it's always kids, because kids don't know what they don't know. And they're not like old people like me, like stuck in your ways and you can't change. They can think. And that's actually what I love most about our job, is hanging out with these young people who really have unique insights and innovations. And there's this one kid I met, again, he's a kid. I mean that in an affectionate way, not a pejorative way. And I met him in Nashville, and he'd already started one company and left, and now he's doing another one. And he was on this idea of agentic AI for workflows 3 years ago.
Right.
Like way before anybody else. And maybe not anybody else, maybe there are other people, but now it's like the hot thing. Matthew McConaughey commercial, why didn't my phone know that the weather was going to be bad, so move my reservation inside? Well, yeah, that would be a good thing, but we don't have it yet, but it's coming.
Sure. And I think we'll probably have just a little bit of time to sneak in our chart of the week at the buzzer mark, because I know we're cutting close to the top of the hour here. But what this is going to show is, if we zoom out and we think about how this relates to blockchain in terms of where are we seeing the greatest profits over 2024, there was an interesting development here, Mark, and I would be curious to kind of hear your thoughts. So this is from our friends over at CoinGecko, and they basically have been showing a couple of different categories. For those that are on audio only, it is 2025. Find yourself a new resolution. Head over to our YouTube stream, and you can see all this amazing content there. We've got a couple categories.
With one warning, one caveat, X.
Yes.
You're handsome to look at. I have a face for radio, y'all. So when you do, don't be surprised when you see the countenance. But anyway.
Oh man, I think what we've shown here is that at a minimum, you're going to get the Bitcoin sock game reveal from our friends at Mount Sox, and you're going to see if we're matching, and you're going to see just something that you wouldn't have expected to see. Good or bad, all right, which is the categories you've got are AI, meme coins, RWAs, layer ones, DPIN, which was obviously all the rage last year, DeFi, gaming, and layer twos. And so you're going to see some pretty streaky things over here, Mark, where kind of at the top two are AI and the much maligned meme coins. And you know what? I just left a board meeting, which I was a little bit late jumping on, and they were really making the case for meme coins in a way that I hadn't really thought about before, because I kind of am pretty negative about them, thinking that there's not really much of a there. But, the idea that they can democratize access to Web3, that you can kind of directly invest in something like philanthropy or disaster relief. I think these are fundamentally good things, or potentially what somebody was saying was they can give you a real-time proxy into popularity, right? Which is sure. And that is something that you couldn't really monetize on the internet before. Maybe you had some Kickstarters and things like that. You have, on a balance sheet in the company, this was very difficult to capture, right? But a meme coin can allow you to do that. So Mark, when you see this chart and you're seeing all these different categories, obviously we just spent a lot of time talking about AI. They're right at the top here.
It's truly amazing. I mean, a couple of things just leap off the page, right? One is at the bottom, the things that barely look like flat lines. Those are actually big returns, like in some cases up to 100% in a year. So it's not like those are horrible returns. I mean,
correct.
And then you jump up to, Bitcoin, which I think, was up 140 something percent.
Yeah.
And then you jump up
140% here, right? Compared to AI.
and then you have this just in what's dominating the page is meme coins. And meme coins, had this run up early on the success of a number of projects like Pepe and others, and then a crash, right? And there was the Giga Chat and a bunch of others. And this is the one thing about meme coins that is interesting, right? They in theory, they're a zero-sum game.
Right.
Because a meme coin, different than a utility token, like where you said where you could participate in philanthropy or disaster relief, that actually is really interesting. If you can spin up a token to collect money and some of that money does good, and so by increasing the value of it, it does more good, that's pretty interesting. So, but just something that is bought and sold between people, unless it's a free and fair launch, right? Meaning that all the tokens are distributed to holders at the same time at the same price, or unless you have a proof of work system where you have to earn it.
Yeah.
The ones that are created by someone who then keeps most of them, either a VC or an individual, and then sells, feeds the ducks, those are less good.
Yeah. And those are the majority, to be fair. Yeah.
That is the majority. That is the majority. But what I think is interesting about that is it's pretty solidly big returns.
Yeah.
And yet someone was tweeting out yesterday that based on their data, which, I believe this, but I don't believe it. They said 95% of meme coin investors have lost money.
I mean, that's a staggering number. Because
staggering number.
What's not shown here, Mark, is kind of what are the underlying TVLs or prices of the assets beneath here. So you're not going to, tell us with a straight face that if you are a institutional investor, you are putting 7-8 figures behind anything that is worth less than $1 with this condition, unless you were listed, in an investment equity.
2,000%, so 20-fold in a year, 20-fold in a year, 21-fold, it's almost 22-fold, 22-fold in a year. And the market cap, right, Dogecoin alone, sort of 64 billion, and then you got a few others, and I would even throw XRP in here as a meme coin at 180 billion.
Oh, the army is going to come looking for you at the tail end.
I knew the XRP army is going to come get me, but I'm wearing my black today, so I'm
what else is new?
But here's the thing. So put all the meme coins together, the market cap is bordering on multiple 100 billion. So you say, well, wait a second. If it's multiple 100 billion, how could only 5% of people made all that money? Well, if, people like Elon create Doge and with Cuban, and then they own it early, and then everyone else is buying up here, and then it falls. And look, humans are going to human. Humans do two things really well. We buy what we wish we would have bought, and we're spectacular. Now, so I don't know if that number's right, but it could be right. And part of the problem is Murad, and Murad had his run in Bitcoin. They ran the leverage fund, and it kind of too much leverage in a 70 vol asset, not a good thing. So his second coming was he published this list of memes, and everybody's like, well, if Murad loves it, then it, and they all went like this. They all went ballistic, and that's that big run towards the end of October, November. Well, then you see the big plunge. So meme coins would have beat the AI tokens, except that what happened is if you have too many memes, there's only so much liquidity. It's kind of what happened with Trump coin and Melania. So Trump coin goes way up, and then the next day they release Melania, and some people sell their profits and go buy the other one. And so there's a robbing Peter to pay Paul, or but I think what's really interesting is that it's totally vertical of AI, and how fast AI went from, hey, there's this thing called render token. And what's render token? Well, the idea was data centers build these big rooms full of computers, and they were mostly CPUs. And then they started adding GPUs. Why did they add GPUs? Well, GPUs could be used to mine crypto. or they could be used to render some high-performance computing things like, Pixar, or maybe in the future, this thing called AI. And so that happened a few years ago. Well, then OpenAI happens, and suddenly everybody's like, oh, they need lots of chips and a lot of processing power. So, hey, this idea of selling processing power. So if I own a bunch of GPUs, I can put a token on it, and I can use that token to have people come in and use. It's actually not a bad business model.
Yeah.
And so these things just went, and anything with the letters AI, like my favorite stock to pick on, right? C3 AI, which really doesn't do anything in AI. I mean, kind of they do, but it's more like a .com, they're a consulting firm. But because their ticker symbol was AI, when OpenAI went public, didn't go public, when OpenAI was released ChatGPT, AI went up like 4x. But that's not OpenAI, dummies. That's C3 AI. And so this is interesting in that the AI thing all ran. But now in January, the paper all rolled over because people realized, hey, wait a second. It is an arms race. And you have this thing called Jevons paradox, which everybody now is an expert on, that the cheaper something gets, the more demand there is. And so part of the reason that computing, even though it had this incredible destruction in terms of things get cheaper and cheaper and cheaper, and you say, well, then the company wouldn't make as much. Well, no, the demand goes up more. And so they end up making lots and lots of money. And I think what's going to happen, back to our original point, is yes, DeepSeek, Qwen, and all these other things are commoditizing LLMs.
Yep.
That's the way it works. It starts as novel, and then it gets competed away, and then it becomes commoditized. And once it's commoditized, the next layer gets built on top. And then that'll get commoditized, and then the next layer will get built. And we'll just keep advancing and keep having opportunities to invest in fun stuff for us.
Yeah, and it's so funny, Mark. Hearing the paradox, it always reminds me of, I forgot what movie it was with Adam Sandler, but he was playing a part, and I think he worked or was frequently going to the going out of business store because basically everybody thought that they get the best deal. So to your point, once it kind of comes down, it just, gets another element of the S curve. And probably the final takeaway here is also the orange line in RWAs, to me, is a little bit of a proxy of the overall utility of crypto. So seeing that go up to me is good as it starts showing that, our industry is really expanding in what can be tokenized. So I guess we'll have to kind of cut it there, Mark. And I think I'm glad I was able to come in fresh from the travels, newly enthusiastic about kind of what we are seeing globally. And obviously tell our users, as always, to rate, review, subscribe. Check out the YouTube stream. You'll never know what you'll see on there, both good or bad, as we were saying. And as always, please remember to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.